Let me begin with you, Mr. Auth. I'm going to call you Steve. We had this yesterday, didn't we?
Yeah.
We had two Steves on at the same time. But Steve Auth, welcome. Good day. You are bullish. You say don't worry about the student loan repayment issue. It's not that big to begin with. And consumer finances and debt loads are pretty good.
Yeah, I mean, the consumer debt service, the external service is like 0.2% of GDP, Tyler. I always say time is on the side of the bulls. In the time that we've been worrying about this, job growth has been 1.6 million people. Wages have gone up. COLA adjustments on Social Security. If you add all that up, there's been a 3.2% increase in consumer income in the last 12 months against a 0.2% hit. So it's not insignificant, but there's other positive things happening.
So go finish your thought. I'm sorry.
No, the debt service is the same way. I mean, the amount of debt is up, but because most consumers' debt is long-term fixed rate, a lot of them refinance
That's mortgage
very
debt.
low rate. Mortgage
That's
debt.
mortgage
About
debt.
70 to 80% of the total amount of debt. So actually, debt service today is running at about 9.6%. It was 9.8% of income in 2019. It was 13.7% at the peak in 2007. So when people get all worried and think we're near something like that, it's way lower. It's much more manageable.
Steve Liesman, you want to react there?
I mean, I think that makes sense. Going back as long as you and I have both been doing this, follow the money, right? And if you look at what's happened, the fact that more people are employed, they're making more money, and now inflation is coming down, has increased real earnings. I think you have some of the ingredients to keep the expansion going. I think there are drags and there are challenges along the way. The student loan thing should not be dismissed. It is a challenge. It could hurt certain retailers in certain places, but not overall the macroeconomy. You do have savings dwindling down from what they had stockpiled from the pandemic. But people were not used to living and spending with that much in the bank. Now that it's gone, it would be a problem if we had still high rising prices. But since inflation seems to be going in the right direction, there's less of a need for that excess savings to maintain current existing levels of
Mike Vogelzang, Steve Auth is pretty bullish. You point out the rise in the 10-year yield on 10-year Treasury. It is, 4.3% today, something like that. And that is pulling other kinds of rates higher as well. What do you think? Are you as bullish, for example, as Steve, or are you a little more cautious?
Well, I'll tell you what, it's really, really murky in the macro environment. That's the way we view it, that you can almost create whatever narrative you want given the various dynamics that are going on. You got a very expensive stock market, 10 years back to its post-COVID highs, up 100 basis points in a few months. You have, Fed funds are pricing in cuts in the first quarter of 21. At the same time, the Atlanta Fed Now number is pushing 6% on current GDP. Most strategists on Wall Street are calling for a recession, either the fourth quarter of this year or next year. It's a very murky environment. What we're focused on, of course, is trying to find reasonable ideas for investment. And there's lots of talk been given this year about the large cash flow generators in the mega cap growth technology names, right? All the Magnificent Seven, or however you want to label them. What we think, and what's interesting, is that we find the same dynamic occurring in small cap stocks that we see in large. That is, the best cash flow stocks in the small cap world are actually performing pretty well, exceptionally well. They've outperformed the Russell 2000 by about 10% or so this year. So you're seeing our premise here is that investors are going where they're treated well, as they often do, and that is instead of staples and utilities in a turbulent, volatile time, you're actually seeing investors find and chase the cash flow. As Steve Liesman just said, follow the money. Cash flow investing is profitable, it's working well, and it continues to work. And I think it's been an undertold story.
All right, we have to wrap it up here. But, Steve, you're heading out to Jackson Hole, I am sure, next week, mostly for the Fed meeting, but also maybe a little fishing, right? What are you expecting next week?
Well, I mean, they're going to talk about structural shifts in the global economy. I can announce right now that our first interview will be 10 a.m. on Thursday morning with Philly Fed President Patrick Harker. And what I want to know is what's the story with policy? With growth high, inflation coming down, unemployment still tight, how does that affect policy?